Yeah, good morning, everyone. So, Friday we saw more of a marginal gain in the US market, but today morning futures are again bit lower, and Asian markets are also mixed. Major concern is seen in the commodity, wherein oil has also come up by around $1, but iron ore and steel are coming off very sharply in China after Friday decline of around 2-3%. Again, today the iron ore is down by around 3%, and steel is also down by around 3%. Major reason for decline is is talked about the lower demand in China. This is being a busy seasons for the steel. Normally prices remain strong, but because of the lower demand, the iron ore and steel both prices are coming off. No doubt, coking coal prices are also declining sharply and are reaching near to the low of around 4-5 months back. Uh, Overall, seems low demand for steel and iron ore companies in international market, so that can have some impact on the Indian company as well. Mainly, going forward from here, our market will be majorly driven by the results and announcement of HDFC merger. And also Wipro has announced buyback, so that can have some impact on the overall index-based stocks. Now request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open with a gap of opening and likely to witness some positive mood during the day. Friday, we have seen that the Nifty has shown a positive closing above 17,600 levels, which gives some sort of a relief sign. Now, going ahead, the immediate resistance is placed at 17,700. Any move about that level, we expect a further momentum to be carried forward towards 18,770, 18, sorry, 17,770 and 17,840 levels on the high side. Whereas on the downside, the immediate support is placed at 17,550. If it's break that level on the closing basis, then we are likely to witness some sort of a profit booking, which might take a Nifty back towards 17,470 to 17,400 levels. So the view is bit cautious, but yes, pullback rally can be seen today because Nifty is respecting the support levels of 17,500 levels. Now coming towards the bank Nifty, for today intraday purpose, 42,370 is the first resistance level. We need to keep eye on it. Any more about that level, we expect to a continuation of this positive momentum towards 42,650 to 42,700 levels on the high side. Whereas on the lower side, as of now, the immediate support is placed at 42,000 levels. Any move below that level will extend the fall towards 41,800 to 41,740 levels. Coming towards the Nifty Finance, 18,850 and 18,920 are the two resistance level we need to keep eye on it. Whereas on lower side, 18,680, 18,600 are the two support levels for the Nifty Finance. So the view for the today intraday purpose is bit positive. We are likely to witness uptick rally during a day. So hold your long positions with the trailing stop losses. That's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. On the derivative front, we are seeing, in the last week or so, that Nifty consolidated after a good jump. This consolidation now seems to be over. We will see, likely see further buying going forward. Once 17,700 level is broken above, a lot of call writing has been seen around that 17,700 strike. So once that is broken above, which is very likely in these coming days, we will see further buying at least up till the 18,000, 18,200 odd levels. A lot of liquidation will take shape at 17,700 strike. Open interest, PCR wicks are at comfortable levels. So all in all, we expect further buying to come in, and selling should not be very aggressive looking at the data. 17,500 is a very good support area, so that should be the stop loss for longs. From the stock specific front, actually, there's no real sector which has seen, consistent buying in the last week or so. But banking sector as a whole has seen a lot of shorts cover in the last week, and so we believe that this sector should move up now going forward. So one should concentrate on this sector, especially the private sector banks, which look good at this point of time. Also, auto sector seems to be now adding longs after short covering. So auto sector, after first couple of hours, maybe we'll see good bounce back and can gain momentum in the week forward. So look out for the same. Yeah, that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. ICICI Bank result was in line with expectation. Advances grew 19% year on year, 4.7% sequentially, and bank said that demand remains strong across all segments. There might be some minor tapering of at system level growth from 16 odd percent to, let's say, going down by 2-3%. But overall growth momentum is there. NIM came at 4.9% versus sequential 4.65%, which is above expectation. However, it seems that it has peaked out and might drift slightly lower in coming quarters. Branch expansion will accelerate in this year, which will mean that cost to income will remain at around 40 odd percent level. Last year it was a bit lower. Credit cost came at 70 basis points, and entire amount was in the form of contingent provisions. So now contingent provision that the bank holds has increased to 1.3% of total loan book, which gives good comfort. So essentially, if we remove this figure, then actual credit cost was almost nil for the quarter, which is a good sign. ROA reached 2.4% for this quarter, which is encouraging, and we think that even if NIM comes down slightly, still there will be good support from credit cost side in the current year, and ROA can be maintained in 2.2-2.3% range in future. Stock is trading at on FY25 basis, it seems cheap at 2.1 times adjusted for subsidiary value. So we think there is a decent upside over here in ICICI Bank, and we are positive. Yes Bank result was marginally below expectation. A higher OPEX led to lower profit before provisioning, which came 10% below expectation. Asset quality improved with slippages at 2.4% versus sequentially 3.4%. And also net stressed assets, which is net NPA plus restructured SMA and other NPA exposures. Together, they reduced to 7.4% of total loans versus 8.7% in previous quarter. Although stock is not very cheap at 1.2 times price to book value, and ROA remains very low at just 0.2%. So we have a neutral view over here on Yes Bank. Also, post market on Friday, HDFC Bank held a con call for clarifying the inputs that RBI has given regarding merger with HDFC Limited. The main point is on the PSL front, that is priority sector lending norms, where typically RBI requires all banks to have minimum 40% of their loan book from these segments, which include rural, agri, and low income categories. So RBI has given leeway of additional 1 year than what was expected earlier. So HDFC Limited will now have to maintain 1/3 PSL requirement by the end of September 2024. So it has a good 1.5 year to increase this PSL book, and subsequent to that, 1/3 PSL requirements will have to be met by September 25, and the balance 1/3 by September 26. As per the Q3 con call, if we see, HDFC Limited already had a good amount of PSL of 1.2 lakh crore out of total loan book of 6 lakh crore. So incrementally, there is not much pressure to ramp up the PSL book. So market will be happy with this. So this will be taken positively for HDFC Bank. And secondly, RBI also clarified some news which will be positive for HDFC Life. RBI has given permission to HDFC and HDFC Bank to increase current stake in HDFC Life to beyond 50%. Currently, HDFC Limited holds 48.6% stake in HDFC Life. There was fear that in the scenario that RBI would not allow HDFC Bank and HDFC Limited to hold more than 50% stake in HDFC Life, then HDFC Bank would have had to bring down its stake in HDFC Life to below 30% as per the banking regulation which currently exists. So this would have meant a significant stake sale of 18.66% in HDFC Life. So that was the overhang in the stock, and now that is behind. So expect good performance from HDFC Life stock as well going forward. That's it from my side. Thank you.
Good morning. CA Infosystem has posted an improved set of numbers for the quarter, majorly on the revenue front, which grew by 7.1% QOQ and 27% year-on-year and came at 72 crores. However, EBITDA margin came in at 40% versus QOQ of 41.2%. versus year-on-year of 43.6%, with this adjusted PAT came at 28 crores versus QQ of 29.6 crores. Stock is trading at a P of 34.8 times FY24 EPS. Thank you.
Yeah, good morning. Hindustan Zinc result was above expectation. Revenue grew by 8% quarter on quarter, mainly due to higher volumes. EBITDA stood at 4,255 crores, up by 15%, mainly due to lower cost of production, which declined by 6% sequentially. Management has guided the metal production to be around 1,100,000 crores, whereas the silver production is guided at 725 to 750 thousand ton for FY24. Cost of production is expected to be in the range of 1125 to 1175 dollar per ton. The management has guided its project capex to be around $200 million, which will be for its fertilizer and roaster plants. And additionally, $400 million capex for its maintenance and development expenses. With the delay in capacity additions, we expect volume growth to remain subdued, and the outlook is neutral for Hindustan Zinc. On the news front, Dalmia Bharat has commenced its commercial production at its second cement line at Bokaro, with capacity of 2.5 million ton. With this additional line too, the total cement capacity of the company has increased to 41.1 million ton. So this is positive for Dalmia Bharat. Maharashtra Seamless has received an order from ONGC with the value of 262 crores for supply of seamless tubing pipes and accessories. The order will be fulfilled in the next 42 weeks. So this is positive for Maharashtra Seamless. Thank you.
Yeah, apart from this, Friday, Rajratan had a con call. Result came below declining, and the outlook seems also negative. No doubt, India continued to do reasonably well, but the key problem is in Thailand, where the volume has declined quarter on quarter and also year on year substantially. The volume came in at 6,300 ton versus 7,100 ton in the last quarter and 10,000 plus ton in the last year same quarter. The decline in the volume is mainly on account of problems in the demand. The demand has come off substantially, and also there is an inventory destocking which is happening, and there is an increasing competition from Chinese player in Thailand for supply of bead wire. So that has resulted in decline in production, and also there is a pressure on the prices as well. The prices realization has come off, and also EBITDA per ton has come off substantially. Company is looking for now capturing the market which it has lost in the recent past, and would be interested to sell more volume, though at the cost of realization. So that can have further impact on the realizations. Though company expect that the lower realization will be compensated by higher volume. As such, EBITDA can be higher. But what we see that the near term, the problem for the company will continue in Thailand. No doubt, India operations will continue to do well. Overall, if we see the total company is currently trading at around 44 time FY24 earning. So seems expensive at current point of time. Share can see some corrections in the near term. Results for Wednesday. Bajaj Finance is likely to report number. Last time we saw shares correcting on lower growth in profitability and disbursement. And this quarter, the expectation is that the PBP is likely to grow by around 25% year on year, which was more of a similar to what it had come in the last quarter. And also, we already know that the AUM amount and the customer addition and all. So that fact is known. Only the profitability need to be seen how it comes. The overall result seems okay. Canfin Home is likely to report number here. The again PBP is likely to increase by 15% in this quarter year on year, and 5% quarter on quarter. So overall result here again is likely to be okay. But HDFC Life is likely to report number, and number are likely to show positive trend, mainly because of the recent high AUM growth on account of Sanchay scheme, which has gone super hit because of the regulatory changes in the income tax law. So any premium over 5,000, there was a good demand. 5 lakh rupees was a good in demand. So HDFC has gained quite a bit on that, and this will be taken by the market as one-off and result. But though the result will show some improving trend, but this is one of type of things which is been positive in this quarter. So the impact on the prices may not be so great because of the good result also. Poonawalla FinCorp is likely to report numbers, and here again the result is likely to be good. Quarter on quarter, NII is likely to grow by around 11%, and PAT is likely to grow by around 12% quarter on quarter and 42% year on year. SBI Life Insurance is likely to show declining trend. Here, the gain on account of the specific scheme which was going to expire in 31st March was not so active. SBI Life was not so active in that. As such, company had seen some declining trend in this quarter. AUM value of new business is like AUM APE is likely to show some declining trend in this quarter, quarter on quarter, but year on year it will show some 10-11% growth. So more of a result is likely to show some declining trend. Then Maruti is likely to report number. Here volume we already know. Margins are likely to show some improvement both quarter on quarter and year on year. Margin expected at around 10.7% versus last quarter 9.8%. So overall result seems positive for Maruti Suzuki. Then Volta's results are expected, and year on year, being seasonal industry, year on year sales growth are expected at 10%, whereas margins are likely to remain more of a stable or marginally down year on year. So result is likely to be okay for that. And Soccer Stop is again, though year-on-year growth will be substantial, but last year, same quarter, there was some impact on the of Omnicore on the retail sales. As such, will be showing 30% growth in sales and almost around 68% increase in EBITDA. EBITDA is last quarter same year last quarter was 10.8%, which is likely to increase to 13.9%. So, because of the lower base, result are showing higher growth, but overall result seems okay. Then KPIT is likely to report number, and numbers are likely to show some improving trend. Dollar revenue is likely to increase by almost substantially by 36% year on year, and around 7% quarter on quarter. So results are and EBITDA margins are likely to remain more of a flattish. So KPIT result is likely to show improving trend. So that's all from us. Now I'll request commodity team to take up from here. Hello?
Yes, sir.
एक minute.
Just continue. Good morning, everyone. So in today's session, commodities are likely to witness some profit taking. So gold can sell around 60,000 to 60,100 and maintain a stop loss of 60,350. On lower end, we expect 59 650 to 600 levels. Selling on rise is recommended in gold. Silver also 74 800 to 75,000 is a selling zone, and profit taking could lead to 73 800 73 500 on lower end. So maintain a stop loss of 75 700. In crude oil prices are trading weak. The May contract is weak below 6400. So selling around 6400 is recommended, and one can maintain a stop loss of 64 750. Sorry, 64 770. And on lower end, we expect 6300 to 6270. Natural gas prices are consolidating, but there is likely prices are likely to witness bounce back. So buying around 178, 175 is recommended, and one can maintain a stop loss of 165. Prices are likely to test 190 to 195 levels. In metal front, copper trading week below 764. So selling around 764 is recommended, and one can maintain a stop loss of 769. On lower end, 755 to 52 levels are expected. Zinc also, in the May contract, we expect selling pressure to continue. So selling around 243 is recommended, and maintain a stop loss of 245. On lower end, 240 239 is expected. That's it from me. I'll ask Utkarsh to take over from here.
Thank you, sir. Very good morning, all of you. In USD INR, we can trade, we can take a position of short if we get some pullback around 82.15 levels with a stop loss of 82.21 levels.
for the target of 82 and 81.96 levels. In GBP INR, one can take a short position around 101 102.05 levels or 102.10 levels with a stop loss of 102.31 levels, target of 101.75 and 101.60 levels. Thank you.